please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're still watching Bazaar Morning Call. Great day for the markets today. Still holding up and no sign of volatility, intraday volatility at all. 11,040 on the Nifty and 36,000 is holding on the Sensex. Couple of stocks. Biocon has been hitting new highs day after day, and today is no different. In fact, in the pharmaceutical space, you have a couple of more stocks. So Indoco Remedies is one that has suddenly been moving with some strength. Alembic has been also looking good these last few days. But from the frontliners, it's the troika of Reliance, Infosys and Axis Bank that have been holding the market higher. So looking pretty good on that front. It just seems like, it's a very secular rally that we're seeing, and no sector seems to be left back, which is always a good thing in bull markets.
When you start expiry week, you look at your positions. If you're short, what do you do? In a market which has done up 4-5% and is giving you no sign of cool off from the 11,000 sort of round mark, you're forced to cover. And of course, there's been short covering, there's been buying, and when FIs buy like this, then their buying and selling, Sonia, is market rates. There's a limit rate and there's market rate. They don't care about 1 or 2% move here or there. So that's why you saw that big move in TCS yesterday. I think that's maybe a reason you're seeing a big move in stocks like Tata Steel today, because that's what happens right now. Liquidity calling the shots everywhere, and that's what's happening in India.
I think we can only get a decent correction after the budget. By then, hopefully, the best of companies would have announced numbers, and usually the more difficult companies come in the last week of February. February 7th is the monetary policy as well. So it's quite possible that until then, this rally definitely has legs, and maybe then it pauses. It's just that, in previous times on monetary policy day, we have peaked. And this time everything comes together, budget gets over, the best of results season would get over, and monetary policy would be behind you. So maybe the markets will pause only in the second week of February or so. It seems now it's such a rally that is simply not pausing to catch its breath. Well, it is in this backdrop that Prime Minister Narendra Modi will be attending the 48th World Economic Forum at Davos. Of course, you will be able to hear a lot more from that big event in Switzerland, besides, of course, the 7:30 p.m. speech, our time, when the Prime Minister will speak. Shireen Ban, who is at Davos for us, is here with what to expect from Davos today. Shireen.
I'm told Davos hasn't seen snow like this in almost 2 decades. It certainly hasn't seen an Indian Prime Minister here at the World Economic Forum for almost 2 decades. So it's only fitting that Prime Minister Narendra Modi kickstarts the World Economic Forum's annual summit here with his address at the plenary session. It is going to be an event and a speech that people, global investors, domestic investors, are going to be watching out for very, very closely. From what we've heard so far from the government, from the team accompanying the Prime Minister, he is going to reiterate the India story. He is going to talk about how India continues to be open for business, a slew of the reforms that have been undertaken, structural reforms like the goods and services taxes implementation, as well as further liberalization of norms to do with foreign direct investment. It is going to be the development card that the Prime Minister pitches here. Outside of that, we are, of course, going to see a lot of activity around the India lounges. Maharashtra has set up a lounge. Chief Minister of Andhra Pradesh, Chandrababu Naidu, is here meeting with investors. The Telangana government is here as well. So several states presenting their story to investors in Davos also. We will keep you updated on all of the action. There is going to be plenty of it outside of what's happening with the Indian delegation. It's a very large delegation, a large corporate delegation as well as a large ministerial delegation. But there are plenty of big global voices that you will catch right here on CNBC TV18.
Okay, of course, that's going to be the big event to watch out for today. But some more earnings now. Indiabulls Housing will be reporting numbers. It's been a strong stock. Abhishek, what are the expectations?
Well, Anuj, largely in line with what consistency they have shown in terms of their AUM growth being between 30 to 33%. That is expected to continue. Last quarter also it grew by 33.1%. So I'll be watching for AUM growth. That is a loan growth to be in the region of 30 to 35%. Now the spreads should be maintained above 3.1%. Largely it has remained between 3.2 to 3.25. Asset quality has largely largely remain stable for this company. So gross NPA, which was at 0.78% in the previous quarter, anything below 0.95% will be positive. One key surprising in Diwan Housing's results yesterday was even sequentially the number of sanctions, disbursement and loan growth were far higher than anticipation. So housing finance results may be strong, and that can be seen in Indiabulls Housing also. Now Motilal Oswal suggests that total income to grow up at 18% YOY, while net profit to grow at about 20-21%. Back to you.
Okay, thanks a lot for that. From one buzzing sector to another, the liquor stocks will be in focus as well. United Spirits comes out with their numbers. Sonal is here to tell us what she's expecting this time around. Sonal, over to you.
Thanks a lot. Well, we're expecting good quarter again. Remember, quarter 2 results were exceptionally good, and since then the stock has run up around 50-odd%, and we're expecting good quarter this time around as well, though the revenue is expected to be flat around 24,066 crores, but EBITDA is expected to go up around 32%, and the margin expansion is expected at around 150 basis points, all this leading to a profit increase of around 54%. Now, which are the key numbers to watch? Volume definitely, but the volumes are expected to decline overall by 5 to 9%. This is majorly because in the base year they had done the franchising of their popular brands. So in terms of popular brands, we're expecting a volume decline of around 10 to 12%. But in the other segment, that is prestige and above segments, we're expecting a volume growth of around 5%. So that will be one key positive. Other thing that we are watching out for is the molasses prices, which have declined sharply in last 1 year. Also, they had been planning to decrease their interest cost by divesting in their non-core assets. So profits are expected to go up because of that, because they'll be repaying their loans, and that will lead to a decline in the interest costs. Back to you.
Okay, thank you very much for that, Sonal. Those are some of the numbers. Today is not a big earnings day, but yes, Indiabulls Housing is a nifty number, and of course, United Spirits is an important number that people will watch out for. And now, as we count down to the budget, the market is hitting fresh highs. Caesar Mastery of Goldman Sachs told us which are the emerging markets that savvy fund managers are buying in 2018.
I think that's a nice place to start. How are investors positioning coming into 2018? And I think the key word is growth. Investors who are dedicated to the emerging markets, that is those who run investment funds that are benchmarked to the asset class, are clearly favoring countries where the growth profile has been improving. India certainly features among those countries, Brazil as well, and Russia as a third country which investors are overweight. And again, I think the point here is what we've seen thematically in equity markets over the last few years is the countries that are delivering growth are the ones that are outperforming. And so I think that's clearly what the view is heading into 2018, that theme.
Well, Just Dial's numbers were better simply because the margins improved in third quarter and other expenses decreased. Revenue growth was still muted if you looked at it on a sequential basis. Abhishek Bansal, CFO Just Dial, is joining in with more details. Well, Abhishek, good morning. Thank you very much for joining us. Margins, a big highlight in third quarter. What explained that performance, and what's the outlook on margins?
This particular quarter saw healthy EBITDA growth. So we had about 80% year-on-year EBITDA growth. Employee benefit expense, which is our biggest cost item, last year full year was about 440 crores. This particular line item should ideally have grown at say 8-9% in line with the inflation trends. But with automation efforts, etc., we have been able to curtail that, and we should close the year at a reasonably lower amount compared to last full year. Other expenses, again, we have been able to optimize a lot on other expenses. So this year, during the first 3 quarters, we have delivered 120 crores of EBITDA versus 110 crores for last full year. And this is despite 45 crores of additional advertising spend. In terms of outlook, as I see, the blended about 20 to 23% adjusted EBITDA margin for first 3 quarters, I think we should be able to sustain that going forward even at current revenue growth levels. If revenue growth were to accelerate, I think operating leverage should help in expanding margins further.
So your revenue growth is a function of realizations and your campaigns as well. What's the outlook as far as campaign growth is concerned, given that the realizations have been pretty steady?
See, revenue growth, which was about 9.2% year-on-year this quarter, was highest in last about 4-5 quarters. So as you pointed out, that revenue growth is a function of campaigns as well as realizations. Realizations which were on a structural decline due to growing penetration in tier 2, tier 3 cities, we have been able to pull realizations back. So this quarter saw 5-6% year-on-year growth in realizations. Ideally for a company, yes, both campaigns and realization should grow, but considering we have focused on consolidating our business, getting efficiencies and productivity back over last 3-4 quarters, which is playing out. So far, realizations has actually helped revenue growth. Going forward, based on whatever steps that we are taking, I think campaigns should also grow.
Okay, by the way, just take a look at ADAG names. All of a sudden, there's a big surge happening in the stock, led by Reliance Naval. That stock is up about 5%. Reliance Capital, Reliance Infra, Reliance Power, and there's big buying in Reliance Communications as well. So, big move right now happening in the ADAG pack. Let's see how that one turns out. But Abhishek, good morning. What's the outlook on sustainability of price hikes?
See, when we launched our advertising campaign, we took price hikes on some of our entry-level products. So last 3 quarters, we have seen that those particular price hikes we have been able to sustain. But obviously, price hikes can be taken only to a certain level. So far, they have been sustainable. Going forward, as we expand our particular sales teams, etc., and focus on penetrating more into tier 2, tier 3 cities, it should result into higher signups. So a combination of more signups and realizations both should help boost revenues.
Okay. JD Omni was one of the key monitorables for the company. Can you give us more updates on this product?
As part of JD Omni, we realized that SMEs valued having a good-looking, mobile-friendly, transaction-enabled website for their business. So we have brought in capabilities where we can create websites for SMEs in a matter of just few hours itself. So as part of Omni, it's the websites that we are providing to these SMEs. Websites could be sold as a standalone or a bundled product. So those websites are seeing good traction.
Can you throw some color on the spends that you will be making for advertising and the outlook on the same? Because, you know, the environment has become so competitive now.
See, first 3 quarters, we spent about 55 odd crores on advertising. As a business, we are clear that this particular business needs a sustained level of advertising in this particular digital era to stay in users' minds. We do intend to spend about, say, 8-9% of our top line into advertising. So could be anywhere between, say, 80-85 crores. Every quarter, we keep analyzing what portion of our advertising spend should go into digital versus non-digital mediums. Whatever gives best return on investment, that is how we try to optimize our ad spends.
Okay, in the past there have been some reports, you have denied them of course, but you know, about Google and few other companies looking to acquire or invest in Just Dial. Any clarifications on that?
See, it is difficult to comment on any such market rumors, so such news keeps surfacing from time to time. As a business, as we continue to focus on growing usage of our product, healthily growing our particular cash reserves, which stand at about 1,085 crores. We do keep interacting with several large corporates as part of our regular business tie-ups. In case there is any strategic tie-up and there are discussions worth disclosing, we would be the first ones to report.
Okay, thanks for that. We will come back to you for more on that. But for now, thanks for joining in. That's Just Dial. Still very, very paltry revenue growth of just about 1% but margins have improved this time around. But on a quick programming note, ahead of the union budget and more importantly with the Nifty hitting 11,000, CNBC TV18 brings together the brightest team of experts who will decode the budget agenda and tell you how to approach the markets. Catch Rhythm Desai, Nilesh Shah, Abhay Lejawala and Sajid Chinoy, who will lay down the wish list for the Finance Minister. Catch the action live at 5 p.m. today.
Okay, lots of stocks surging. You know, just spoke about ADAG. Look at that now. Relcom is actually up 10%, Reliance Power up 6%, Naval up 6%, Capital up 5%.
No, actually,
there's a frenzy out there.
We've been saying large stocks will lead the rally, but the mid-cap is up 1%.
Mid-cap index is up 1% right now. Large caps are not giving up, but a lot of mid-caps are beginning to participate. Mid-caps underperformed all through last week. Last week, in fact, the mid-cap index was down. It looks like is making up for some lost time.
Actually, this is time for caution as well. Yes. All kinds of stocks are going up because, you know...
We've said that, I think, ad nauseum so many times over the last 6 months that it's time to be cautious because of the move in some of these stocks. But... you know,
no, the mid-caps also have seen those large, brutal cuts on some days. So those who climb on at such times will, you know, especially if you're, you know, in for trading, then there can be serious. You know, every day when in markets today talk back, we have people who have gotten into one of these over-leveraged stocks at higher levels and are asking what to do. So there can be that kind of trouble. You know, you must be cautious. When you fall from the first step down, you don't get hurt. But if you fall from the top of the stairs down, you get hurt a little more.
So keep dancing in this party, but just keep your eye on the door as well, right? Be ready to exit when you can. All right.